iPhone and Android devices.
Drew Mattis, senior economist at UBS in Stanford. Good morning to you, Drew. Thank you for getting up early for us. The president making an expected nomination at a bit of an unexpected time, but market's going to find this a favorable bit of news, I would imagine.
Yes, I mean most people regard Janet Yellen as dovish. The timing of the whole thing is interesting, and I think it's going to be important to watch how Janet Yellen handles the reported press conference at 3 with the president and Ben Bernanke, because if there was ever a chance for the Federal Reserve to be used for political purposes, this is probably the time. So we'll have to see how adept she is at maneuvering around, taking sides in the whole debt debate.
My guess is she'll say, "Thank you very much, Mr. President. I'll speak later." Is she dovish? Is that a fair characterization of her policy leanings?
I don't necessarily think so. I mean, I do think her preferred method for trying to quote unquote manage the economy, the optimal control method, I think is a little. It's a cause for concern, but I also think if you look at her time as the San Francisco Fed president, when the economy was doing well out in San Francisco, she did not sound dovish at all. I think she's a person who takes her role within the Fed very seriously, and her previous role, her current role, I should say, was vice chairman to a chairman who is being attacked by the hawks, so to speak. And so what would her role be in that scenario? Her role would be to say the things that the chairman can't say in order to defend the current policy, which would then obviously skew her towards the dovish side.
Now, this has been rumored for a long time, so there's no real surprise in her nomination, and you don't see a huge move in the markets. But to the extent there is one, it seems to be positive. Is that because of the perception that she's dovish and will see Fed policy lower for longer?
I think so, and if that's of course worrisome to all the people, all the economists like myself who are worried that every month the Fed goes and buys another $85 billion, that hole that they have to climb out of later just gets that much deeper. But I do, as we were just saying, it might not be the best call, because I think that she's going to surprise people. There are a few jobs in the world that change the person who enter them. The presidency is one, and the Federal Reserve chairmanship is one as well. I mean,
Okay, enough of that. Welcome in. My name is Mark Vierra from Sunnyvale, California. I'm going to go over some basic analysis that I publish every week in my trading log at HotStockMarket.com. And now for YouTube viewers, you'll see all the links provided down below. Just to start this off, let's look at, we're up for the month, up for the week, and 1.5% from the current high on the S&P 500. So let's start this off now looking at some charts. Got the monthly trend. Talking last month about the topping tail here. Zoom in a bit. Now we have a bottom tail, and this candle isn't closed, but we can see a range being foreshadowed here. I would say just from the monthly, this 1690 would be an area of support. Just basically looking at this line in between the upper bodies here and this lower body here as finding support. That's it on the monthly. Unclosed candle. Take a quick look at the weekly chart. Okay, now we can see the monthlies divided up into weeks. There's our upper range, and this is quite a sign of strength when I see a bottom tail like this. This is, like I've said before, institutions want to swing things in one direction, take out stops, and then move in the opposite direction. This is just a strategy, and it's pretty obvious why and all of that. So look at our hit me in the head with the hammer moving averages. I like to look at moving averages just to, it gives me a landmark, and I don't trade off of moving averages, but like I say, landmark price We're above the 20-day, 50-day. All the moving averages are rising, and that's a sign of bullish behavior in the market. And these are lagging indicators. Like I said, hit me in the head with a hammer, so I know what's going on. All right. What else do I want to do here? Gonna take a quick look at chart patterns before I save the best for last, volume. And not much for patterns this week. This is sort of a star doji. It's an inside candle. If it would have been down here, I could technically call this one of those abandoned baby or morning star is another one. But it is a star doji, and the psychology here was taking out stops and before the move upward. Okay. Now I also have an interesting, I don't know, call it a fantasy or an idea of the possibility this was up zigzag, down, up down distribution area, and we moved down to create this symmetrical triangle. And I noted last week the symmetrical triangle area here at the vertex is an area to possible bounce area. Now, what if we saw this area here, and I have another chart, let's bring that up here, that if I start seeing this zigzag area forming a right shoulder, and I did a little extrapolation here, just copy pasted this leg, it's a possibility. Now, if we get a right shoulder up, let's say over 1720, 1725 near the head, then it negates that pattern, which isn't even a pattern. This is just a potential fantasy of mine, that this is something that could rear its head. Now, let's get into volume. Okay, I'm looking at the same star doji on the SPX now here. This is the SPY, and this was on the 9th, and we had a spike of volume, and this line is just representing, it's showing me, okay, what level of volume could I consider a spike? And definitely this red here is an indication of institutional interest. Now this white dash, this is my all-time, this is 250 million SPY volume, and that goes back to some other climaxes. That's where I'll really pay attention. If I see a spike near that or above, that's going to tell me that that shares are changing hands, and since the price is moving up, it's likely that would mark an intermediate or short-term top. Similar to what we had here. You notice this volume, this white, and declining volume is typical, so I'm expecting volume to decline as the price moves upward, and I'll be expecting some consolidation. Now let's look at some near-term charts to confirm with volume on that. Shrink myself down. The moving averages look like they're rolling over. We see the decline in volume. And that's one thing to note. Also, I'm seeing that prices outside of the playground. That's usually a sign that price is going to move back into the playground, or what I just said, consolidate. I also expect the possibility of this playground to 70% of trading activity to expand upward with price. That's also a potential possibility. On the near term, see how the distance between the playgrounds, now we're getting a shorter distance. So I think we're going to see a little bit of consolidation where the market is going to look to find a base. That's sort of a normal thing for the market to do. And what else? Let's see. Well, you'll notice that I am wearing my I'm in a good mood, happy Hawaiian. Had some trades last week that were moving in my direction. Could change this week. Excuse me. But it's good when things work out. I got into an option contract here when I saw this on the 9th, or this was the 8th. This is when I got in, and so far I'm doing okay. We'll see what happens. But it's nice to have a little skin in the game, and the euro has just been a great trade for me, shorting the euro. This is like my fifth round of shorting the euro. I've got all my positions on my trading log, and I'm not making any um, propositions to buy. I'm just letting you know what I'm doing. Um, and I think that's about it. Let's call this a video just to show you HotStockMarket.com. This is my home away from home, and you can see vote in my poll, up, down, up, flat, or down for the week. It's kind of a fun thing to get involved in, and here's my trading log, which I'll be uploading this video and submitting the trading log for the week, and I hope to see you on the boards.